You're watching Inside Automotive with Jim Fitzpatrick.
Was Q1 buy-sell activity indicative of what we'll see for the remainder of 2024? Well, on today's show, Erin Kerrigan, the founder and managing director of Kerrigan Advisors, will walk us through what she expects for the rest of the year. Joining us now is Erin. Thank you so much for joining us on the show. I know that you've got a very busy schedule. You just mentioned that you know, in the last week you've knocked out a few closings already. So I know that you've been extremely busy. Congrats on that.
Thank you. Thank you very much. And congrats to the team at Kerrigan Advisors for their hard work. So,
Sure.
thank you, Jim, for having me on. And
Sure.
happy to talk about what continues to be a very active buy-sell market.
Let's jump right in. What was the buy-sell activity like in the first quarter for 2024?
So the first quarter actually exceeded the first quarter of 23, which we did not expect, only by a few deals, but nonetheless slightly exceeded 2023's first quarter. And so we are actually tracking to about 400 transactions this year, which would be in line with our peak level the prior years. So no slowing of the buy-sell market, although I will say its makeup has changed a bit. So we are seeing more sellers coming to market. So we attribute the increase in activity to the fact that there are more acquisition opportunities available to buyers. Okay. And buyers still have a lot of cash to spend.
Does it make it more of a buyer's market in this case, or is it still, are sellers still doing pretty well?
Sellers are still doing very well, although we're seeing the market diverge a bit into have and have not. So those in top growth markets and the strongest franchises in the industry continue to capture very strong valuations. Those dealerships in less attractive markets or less attractive franchises are finding it harder to achieve a sale at the price they're seeking. So what I would say is with the supply of dealerships increasing, we are seeing a shift from the seller's market of the pandemic towards a buyer's market.
Okay. And what does all of this activity say about the rest of the year?
Well, based on what we're seeing, we expect this year to be a very, very strong year. Another indication is the Publix did about over $1 billion of acquisition spending in the first quarter. Wow. In the United States. That was the highest percentage of allocation in terms of their capital allocation. It was over 40% towards U.S. dealership acquisitions. So they too are tracking to, if they continue at that pace, that would be $4 billion roughly of spend on U.S. acquisitions, which would be the second highest level ever spent on acquisitions. Now, they may not continue at that pace, but I do think that what we still have in our industry is just a tremendous amount of capital. And that is because we had 4 years of earnings that were multiple times pre-pandemic earnings. So we estimate that we have about $250 billion of earnings that were achieved. That's almost 3 times what we achieved the 3 years prior to the pandemic. And so there's just still a lot of capital and that has not been invested, and dealerships still remain a very attractive place to put your money.
That's right. And they're still doing very well, even though the gross profits have come down. The service centers couldn't be busier. The sales are still very, very brisk. Of course, in some areas, in some pockets, not so much, but the business is still alive and well out there and very healthy to all the dealers that I speak with. Given some of the mixed economic signals out there, what's behind this activity? I mean, you think about rates and interest rates that we hear so much about, which hurts a dealer's floor plan and other loans and what have you, and then of course the consumers, that's a concern because of the rates, but things are still moving along at such an incredible rate.
Interest rates should really be a huge drag on the buy-sell market. In that in most industries, when interest rates go up, M&A activity goes down. There's direct correlation. And in fact, we wrote about this in our full year report about how our industry has very much defied the overall corporate M&A market.
Mm-hmm.
And the reason that we believe that that is the case is that we inherently have a limit on how much debt you can place on an acquisition. The OEMs limit that. They do not let, by contrast, in other industries, a private equity firm will go in and put 100% financing on an acquisition if they can. Our industry won't allow that, and so we've never been one that has had tremendous amount of leverage in our buy sells. And dealers are not levered that. The dealers don't have that much leverage. They do have floor plan, but that's backed by hard assets. So it's very different than a blue sky loan, which is backed by a franchise value, which is not something you can tangibly hold. So I believe that's why interest rates being so high have not severely negatively impacted the activity level nor the valuation. Of course, it has impacted new vehicle sales and gross margins, as you've pointed out, but dealers always figure out a way to make that up elsewhere. They sure have. True. And so the business continues to, in general, outperform. Now, there are pockets you mentioned. Some markets are finding it more difficult than other markets, and things are dropping more quickly in more competitive markets, and holding strong in other markets.
Yeah. So what's I know that for the dealers that are listening, which franchises are in the highest demand and why?
Well, what we're finding is the top import franchises, both the non-luxury and luxury, are in the highest demand. Toyota, the perennial star of the show,
that's for sure,
continues to defy the market, and they really have proven themselves even more so in their steadfast commitment to saying, we're not convinced of this EV thing. Turns out their go it slow strategy was exceptionally intelligent.
Spot on.
Spot on. And they are reaping the benefits of that, as are their dealers and their franchises in terms of franchise value. So we did actually increase the multiple of Toyota in our first quarter Blue Sky report. The other franchise that's doing very well is BMW. BMW has, in our estimation, done the best job at the EV game, and relative to their luxury competitors. And they continue to perform very well. So those two franchises, we increased the multiple. On the what we've also observed, interestingly, is VW and Honda. Their sales have increased quite significantly in the first quarter, but with this challenge related to their attempts to go direct to consumer, that does put a pale on the view of the multiple for those franchises. So you would expect some increase given their performance, but we are not seeing that in the marketplace. And I think that really speaks to some of the distrust that's being created by the fact that both OEMs are flirting with the idea of a direct consumer EV strategy.
Yeah, for sure. How are EV sales, since we went there, how are EV sales, or I should say the lack thereof, impacting the valuations?
Well, again, that's where I think that with Toyota, that's where you continue to see them just so far outperform, because the whole market's going to hybrid now. So you see a lot of OEMs doing catch up.
That's right.
And trying to figure out their strategy. The problem is you don't poof and create cars. Vehicles are they're very time intensive and capital intensive, and so
that's right.
We do expect that those OEMs that have been prudent with their EV plans, meaning they haven't allocated all their capital to EV and have given themselves some flexibility, are going to be the most successful going forward, that relative to those that maybe have gone so far all into EVs that they really have a lot of flexibility to change course, because all of this requires billions and billions of dollars, and a lot has been invested, and it's really hard to recourse your whole organization towards a hybrid strategy.
That's so true.
I do think it's going to be very important to the future value of every franchise, tracking how OEMs plan their change in powertrain.
Yeah, for sure, because it could take 3 to 4 years before new models start rolling off the assembly line, right? I mean, you don't, like you said, you don't just turn a switch on and say, okay, we're going to switch over the whole. That takes years of, development and such. But let me ask you this question: what's the OEM's role in today's buy-sell market? Are they getting more or less active in the actual, transition to a new owner?
They are definitely getting more active, and I think with the onset of Tesla and their success in going direct to consumer, it really opened some of the OEM's eyes to maybe we need to change our franchise network. And some are saying, look, we want fewer larger dealers. And to achieve that, they are being very aggressive in using their right of first refusal, or in some cases just being pretty brazen in just rejecting a buyer if they can't find a buyer that'll match the price that's been contracted. They'll just reject a legitimate buyer and sort of have an aggressive stance of saying, well, what are you going to do? And the dealer's kind of left in a difficult position. So I would just say that the work that the associations do to protect dealers, the state associations, has never been more important than today. Because I do think a lot of OEMs are just like I mentioned with Honda and VW, looking at their dealer network and whether it's management consultants that are sitting in there and telling them they need to change things or what have you, whomever's whispering in their ear, we've seen more aggressive behavior by the OEMs than we've ever seen in our experience.
Wow. What happens to a seller of a group of stores that's got 10 stores in it, let's say, or 15 stores, and you got that one holdout OEM, and I won't mention any brands because I don't want to ruin this, but one that goes, no, we're not going to approve that buyer. I mean, do they carve that particular store out of the sale and say, okay, we'll address that later, or does it screw up the whole sale of the group?
Well, fortunately, our firm has done more multi-dealership transactions than any firm in the industry, and has very successul at closing all of them and not having that situation.
Haven't had that yet to deal with. That's good.
But I've heard of situations like that, and I think that it does become very challenging. I think for the most part, when you're looking at like a Koons transaction, most OEMs do not want to have exposure to a $1.5 billion transaction and screwing up. That would be a significant deal to cause to not go forward. However, I will say it just gets trickier and trickier, and that is part of what we work so hard as a team is to make sure that doesn't happen and find the buyers that for our clients that will be approved by all the OEMs. Yeah,
that going in that this group is they're stellar, and it's going to run right through.
Exactly, but it is a little bit of it's quite a complex matrix that goes on to get those very large transactions completed, and again, I think the work that the associations do, the state associations, I just continue to plug their hard work because those franchise laws are so important to our clients.
No question.
They deserve the protection that they provide, and we just want to continue to see that they receive that protection, because dealers are incredible entrepreneurs. They put their necks on the line.
That's right.
Have debt and personal debt associated with the business, and it's only right to allow them to maximize the dollars that they're seeking when they do decide it's time to exit in a way that is fair.
That's right. I agree. No question about it. Erin Kerrigan, the founder and managing director of Kerrigan Advisors, thank you so much for all of your insights today, and thank all of you for watching, not Driving Solutions. Sorry about that. Thank all of you for watching Inside Automotive with Jim Fitzpatrick right here on the CBT Automotive Network. Thanks so much. Appreciate it, Aaron. Say hello to Ryan for me. And till next time, stay well.
Thank you, Jim.
Thanks.
Thanks for watching Inside Automotive with Jim Fitzpatrick.